to my window.
Hello traders, Gary Wagner here. It is approximately 10:45 here in Honolulu, Hawaii, Monday, June the 27th, and this is the daily report for gold. We do have gold under continued pressure this morning, currently trading down about $6 as you see a current print of $14.95.84. Of course, we are flat now in the market awaiting some signals. But on today's report, I want to talk to you about a particular pattern that is not a candlestick pattern, but in fact was created by a forecaster who was prominent within the 50s called George Lindsay. Now, I'm not speaking about this George Lindsay, the old goober on Andy of Mayberry, rather George Lindsay, the stock forecaster. And he had one particular pattern which was incredibly strong called three peaks and a doomed house. You're looking at that, and this pattern itself is a pattern which forecasts not only price but time, and we'll talk about that in a little bit more detail through the week, because I will let you be the judge, but I think that you can see that we have some very, very strong similarities between the market that we're looking at in gold. This, of course, is our daily chart, and his particular pattern, three peaks and a doomed house. Now, as I said, I really believe that you will notice some similarities, but I kind of want to go through a couple of the tenets behind this particular pattern. The first thing is that you start with your three peaks. We've got four here, but I think you can easily see the similarity from here to here. And from these three peaks, you begin to work with what is known as the house or the doomed house. And on the doomed house, these lows that you'll find, and this would correspond to 10 through 14 here, you do get, this is called the basement, and you do get the basement right in here, as you can see. From the basement, George Lindsay believed that you move to what he called the first floor, and that would be this right here, and that, of course, would correspond to this part of the chart here. And from there, you do get what he labeled as the roof, or the peak of the market right in here. And I think that you can see that we do have a pretty good correlation between these particular price points and the pattern itself in terms of the way that it looks and the way that it is reacting. Now, the belief was from this roof you would go and get a major decline. And I believe that that's possibly what we in fact are witnessing now. Now, the conclusion of this particular pattern, the doomed house or the price decline, is quite interesting, because the belief that George Lindsay had was the price decline, when we take a look at it, and that's right in this area, that would be his 0.28 right in here, he believed corresponded to 0.10 within the chart, 10 being the basement itself. Now, when we take a look at the lows that we got in what he's calling the basement, in other words, it would be a full retracement from this last move here, we are looking at, in terms of a potential price target, of around $1,300, call it 1310. 1308 was actually the low on this. And so the belief on this pattern, of course, is that once you actually go ahead and reach the roof, you will get a nominal decline, you will get the market retracing back up, and then you will get a large, drastic move to the downside. It doesn't have to be a straight linear move down, but the belief in this particular pattern in terms of the price point here is really somewhere within this area, anywhere between, say, 1308 and call it 1350. I think that that would be the area we could possibly look at for a correction in this market. Now, how does that correlate to the other patterns? Well, obviously, we still maintain an Elliott wave count, and if in fact we did get what is known as a truncated or a failed fifth wave, which at this point I believe has a high probability of actualizing, and we will really know if in fact we see these particular lows breach. But as I said, the first critical point was at 1551. We could not take that out. When we didn't take that out, as you know, all through the last couple of weeks, I have been turning from moderate or medium term bullish to medium term bearish. Long term, I'm still very bullish. I believe that we are still within a major bull cycle, but we are in a corrective phase. Corrective phase, of course, is going to have three waves down, A, B, and C, and my belief is that we're probably in a wave A of that decline itself or that correction. The way that we're going to be able to ascertain with absolute certainty, of course, is that if this market continues down, when we get our B wave, in other words, market will continue down. When we get our B wave, it should make a lower high than this 51 area. And then when we get our C, depending on what kind of C it is, if it's this steep, obviously it's going to be a very large sell-off. And so the reason for bringing this pattern to your attention is that I believe when I look at this chart that I see a pretty substantial correlation, and if in fact we are going to witness a market that's going to be in a more of a major ABC decline, then I feel we have to ready ourselves and also strategize in terms of our best philosophy, whether you are a trader or you're holding physical holdings, because physical holdings, we're going to have a completely different scenario, of course, than as a trader. If we are going to enter a full-blown corrective phase, the proper moves, of course, are to go in and to sell the rallies and then cover on the dips, as opposed to the strategy that I've been maintaining, which is to buy the dips and then cover at the peaks of the rally. So traders, when we take a look at that pattern and now go back to our Elliott wave, how do I think that we have a correlation? And it's really as follows. When we take a look at where we're at, my current belief right now is that there's a likelihood, of course, this is wave 3, 4, and 5. My belief is that we're probably in our corrective stage, which is going to be A, B, and C. Now, in terms of how deep it's going to be, if in fact it follows the pattern we've talked about, it could be a fairly severe or deep retracement going anywhere, as I said, I believe between around 1350 and 1300, 1308 being the low. That would be the area if in fact we see that kind of correction. Now, if in fact we are going to witness that type of a correction, we have to look at it under the confines that we are entering a corrective phase, this being a major 5 that's just been completed. However, it was completed as a truncated 5th wave in terms of 3 and 5 on our intermediate count. So for that, we really need to go back to the beginning of 1. And as you can see, I'm marking the beginning of 1 really in October of 2008. So if we go to our weekly chart, and that's this here, that would correspond to, of course, this particular point right in here. And when we do that and we look at our 23% retracement, you get to around 1358. And therefore, in terms of the potential or possibility of a larger correction, it would be within the confines of this area between 1308 and 1358. This has been Gary Wagner, wishing you as always good trading, and we'll talk to you tomorrow for another daily report and update. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange